Hello, everyone, and welcome to the big show. This is Investing and Trading Live, sponsored by Trading Academy. If you're a first-time listener, thank you for stopping by. As always, I am your host, Josh Lilquist, and today I do have my good friend, and yes, he is a good pal. You may have heard that before, and yes, you may have seen him before if you're watching on the YouTube stream. The one and the only Mr. Al Connickson on the show today. Al, how are you doing today?
You know, as usual, I'm feeling pretty good, Josh. Feel fantastic. How about you?
I'm doing good. If that was an email, it would say per the usual, right? You know what they say in corporate America all the time. And if you're corporate America, you know what I'm talking about. But this is not a corporate America show. This is a financial show. We're going to talk about the stock market, how it works, how to make smart investing decisions, whether you're looking for long-term investing, say 401k, IRA, or maybe you're looking for trading strategies, short-term income strategies. We're going to cover a lot of those topics here today. Our sponsor, Trading Academy, over 20, actually on their 28th year, teaching people just like you how to invest, how to trading, how to get started if you're brand new, or how to have more consistency if you're a seasoned investor. And as we get into the show every single week, a quick market update. As we know, there is something coming up here over the next week here on the 5th, I believe it is. November 5th? Is that
something
thing we're talking about?
I can't quite put a finger on it, but it seems to me there is something coming up.
Something coming up, and we won't talk about that today. But the market might be kind of waiting to see what's going to happen with that event. Yeah. Market is kind of consolidating. You're looking at the S&P 500 consolidated around the 5,800. We'll say 500, 800 to 500, 900. So the market's just kind of just sitting there waiting to see what it's going to do, but it's still showing great opportunities. And we're going to talk about other assets as well. You talk about oil every single week, and I think 2 weeks ago, maybe it was 3 weeks ago, we were talking about how great the oil market was, just soaring to the upside after some things that happened. Then it soared to the bottom side. So it's been showing great volatility, which is great opportunity in these markets, and that's what you want. Is you want these prices to move so you can capitalize on that. Now, with other stocks, I mean, we had earnings last week. We talked about that last week, and showing some great opportunities, some blockbuster earnings last week. So just great opportunities, great movement in the market, news coming up, which is going to bring more volatility. With more volatility, people become sometimes afraid of the market. Now, think about your everyday life. People are not afraid to go drive. That's very risky. People are not afraid to ride a motorcycle. That's very risky. But what can they do? They can minimize their risk in their everyday life. Putting a seatbelt on, looking both ways, maybe stopping, hopefully you're stopping, not just rolling through stop signs. That's what we do in our everyday life, and that is exactly what we can do and accomplish in the financial markets. Let's discuss these opportunities and how to protect those accounts, Al.
Yeah, well, let's kind of not use the word risk. Let's just use the word capital management.
There you go.
It's managing your capital. People look at risk and they get afraid of that. They think it's a bad thing. That's just anticipating something that could go wrong, not necessarily that will. But if you manage your capital, then you can participate in these markets with a high degree of confidence. But you know what I really want to start out with, Josh, and I think this is important, is why we do what we do. Mm-hmm. And our goal and our job is to empower people to be able to achieve their financial goals, the vision of what they want their life to look like. You know, and what we do to help them get there is we provide financial education. We provide the knowledge necessary to participate in the various financial markets. But in addition to the knowledge, which is not of any value unless you know how to use it and when to use it, we provide the skills. We help people develop the skills to use it. How do we do that? Well, we do it by providing classes that people can participate in, taught by professional instructors, guys that maybe worked on the floor of the exchanges, maybe running hedge funds. And then we also provide ongoing support and mentoring and guidance for people. So that just to kind of start. But what we want to do is to keep this simple, Josh, and we keep it simple by just having people follow the smart money. Who's the smart money?
Yeah, who is that?
It's Warren Buffett. It's Goldman Sachs, J.P. Morgan.
It's the big money, right?
It's the people that have billions of dollars and maybe even trillions of dollars to invest.
Because they move the market, correct?
Yeah. Why? Yeah, because they move the market. They're consistently successful. The smart money is consistently successful. Unfortunately, The not so smart money isn't. And the not so smart money group, that's typically the retail traders.
So once you identify that, what can you do to have more opportunity, more odds in your favor?
Well, if you can identify when or who's moving price, not who's moving price, but when their price is going to move, and that's the most important thing.
And that's developed by the big money, right?
If the big money is moving price, if their investments are so large that they can impact price movement up, and when they sell, they can impact price movement down, you want to be able to identify that. But the key is not just to identify it; it's to be prepared before they accumulate their full position. What I mean by that is that the smart money, the guys we're talking about, they invest in such large quantities that they can't do it all at one time. I guess you could kind of call it stealth accumulation.
Is that a new one?
It's
a new term for you?
It's a new term that I have used, I guess, but it's not a new term.
There you go.
It's just the first time we've used it. But what I mean by that is that the big institutions, the big players, they'll never get all of their trades filled at one time, so they do it incrementally. To be truly successful, you have to be able to identify the first part of a big move, a turning point in price, so you can be prepared. So when they do the additional parts of their order to get a full accumulation, you're already prepared. Once a big player, once the smart money makes an investment in something, they will support that investment. They'll keep doing what they can to keep moving it in their favor. So you ought to be prepared already before that happens. And that's where a lot of people say they understand that the institutions move money, but they don't know how to identify it. We teach our students how to find that on a price chart.
I like that, and that's really, you can really keep these markets in trading and investing. Actually, you can keep it simple. And first off, as Al is alluding to, you need to see who is moving the markets. It's the institutions, and how do they do that? It's because they have billions of dollars. And then what we need to do as retail investors, the public is considered retail investors.
Right.
So what we need to do as a retail investor is trade like them, essentially jump on their coattails. And we'll probably talk a little bit about supply and demand a little bit later, how that looks. I mean, we do these investing classes where you can see it, but we'll talk about here today. And then that way you can make smart and more informed investing decisions. So if you want to learn more about this strategy on how to follow those institutions, if you can't beat them, join them. It's funny, those sayings are actually true that you hear when you're kids. If you can't beat them, join them. So I want to give away some seats to a trading and investing class right here at the Academy or at a location near you. We have locations all across the metro area. Simply to come into one of these classes, just text the word investing to the number 210-210, and that'll be for 2 seats, one for you and a friend for a free trading and investing class. Text investing to the number 210-210. When you do that, you're going to get a text right back with a link to our landing page, and you can pick your own date there. Or you can go to investingandtradinglive.com, and you can pick your own date there. We have them several per week. Investingandtradinglive.com. We got a lot more to discuss in the show. Income strategies, retirement strategies. This is Josh and Al, Investing and Trading Live. We will be right back. So we will stay live on the YouTube. Did you get that term? You said something that I say a lot. I'm wondering if you stole that from me.
What did I say?
Capital management.
Oh, capital management.
Did you catch that in the workshop the other day?
You did mention that in the workshop, once in a while you actually come up with something that's worth repeating, Josh.
Once in a while?
Once in a while.
Like once every 6 years or 7 years?
No, that's a shorter while than that.
Oh, 2 years?
Maybe once a week or once every couple of weeks. Yeah,
hey, thank you.
You're getting better.
I appreciate that.
You're getting much better.
Man, now I got to be nice to you on the show here today.
For a change.
For a change. All right, that's a good one. All right, so we will go to segment 2. Anything special that you want to cover on section 2?
I guess the importance of being able to generate, excuse me, additional income.
We can talk about that. All right, so we got 8:15 on the clock, huh? This clock actually stops on me.
Oh, great.
Yeah, I don't know why. So I have to guess. I'm gonna actually put it over on this screen because it is just not working. All right, so we will go segment 2 here. Second is Saturday, right?
Yes.
All right, here we go. Segmente número 2. Welcome back to Investing and Trading Live, sponsored by Trading Academy. As always, I am your host, Josh Lilquist. On the last segment, we talked about who is actually moving the financial markets. Who has the big money? It is the institutions, the banks, the Buffetts of the world, the Goldman Sachs, the JP Morgans. They have the millions and billions of dollars. So when you're able to move the market with that much money, there are actually some disadvantages.
Right.
And maybe we'll discuss that a little bit.
To them.
To
Right.
them, correct.
Mm-hmm. Right.
Which actually gives us, as a retail investor, an advantage. We can exploit that a little bit here
Right.
today in this segment if you want. But we had a lot of people that want to understand more about how that actually works, how the institutions move the markets. How do you make smart investing decisions so we can trade like them, not against them? So we have these investing classes that we do right here at the Academy. These are classes where we've taught thousands, just like you, are many strategies which are designed to teach you to make smarter investing decisions. So text the word investing right now to the number 210-210, and that's for 2 seats, one for you and one for a friend. Text investing to the number 210-210 for 2 seats for a trading and investing class to learn more about how to follow the institutions while investing and trading. So that being said, Al, on this segment here, we can talk about some of those advantages, but I know there is a lot of people that want to have multiple income strategies. Not multiple jobs, but they want to have multiple income strategies so they have more say in what they do and not have to go punch a clock at many different locations. Right. So I want you to talk about the different opportunities that the markets present to have an income strategy, but really, why is it so important to have more than just one?
Well, if you have one and it goes away, what are you left with?
Poor.
Poor. That's P-O-O-R.
Yeah. Do you want to talk
Not
about the
P-O-U-R, although some people would end up
they
pouring
probably pour
something.
something, correct?
Yeah, that's right.
Let's hope they're not. But
Yeah, but it's so important, and we know, Josh, it's important because the majority of the people that are truly financially successful in this country have multiple sources of income. And, we're talking about people like Warren Buffett. Warren Buffett owns, portions of many different companies, but he also generates income off of assets that he really doesn't talk about to other people. He generates income off of short-term assets, because if you listen to Warren Buffett, most of his advice to the public is buy shares of something and hold on to it forever and you'll do just fine.
Is he doing that?
He does that, but he also makes about $8 billion a year trading things like options.
So you've ever heard of that term, do as I say, not as I do? And is that possible that's happening?
In fact, I wrote this down because I want to refer to that. It is, in fact, that is a saying. Do what I say, not what I do.
Do we have ESP?
It's something like that.
Or you remember that commercial ESPN? Right.
All right, let's get back to what we actually
back to our
talking
regularly
about
scheduled
here.
program.
So I'm going to say that saying is wrong. You should actually flip that around. Do what I do, not what I say, because oftentimes hedge funds, people that have to provide profits for their clients, will say something or do something. They'll say something to manipulate the market, I'm going to say, and hedge fund managers will even tell you that we have to be able to manipulate the market to be successful. How do they do that? Well, they will say things that aren't necessarily true or not necessarily in your best interest. But if you follow what they do, that's one thing they can't hide. If you learn how to read a price chart, you can find where these turning points are. You can find where they say the beginning of a trend is going to be and the end of a trend. A lot of the advice that you're given is actually going to probably impede your ability to have full returns. A lot of people say, well, you don't want to start investing at the beginning of a trend. You want to make sure you have, confirmation of that trend, which typically maybe gets you in the middle of a trend. Well, you look at people like Paul Tudor Jones. He's a billionaire trader. Paul Tudor Jones has said, look, I make my money at the beginning of a trend, at the end of a trend, not in the middle of a trend. So if you can identify those turning points, which are caused almost 100% by big institutions, big smart money players, then you can be positioned to benefit from what they're doing. We mentioned before that they will not put all of a position, or they can't really get all of a position filled at one time. That's one of the disadvantages that Josh mentioned. When you're trading billions of dollars in one position, you can't let everybody see that. Otherwise, the price is going to go so far out of range that you won't want to own it. So to get filled at the price that they feel is true value, they have to put out their trades incrementally. They have to try to hide them. Our core strategy is designed to find that. So you can identify where they're going to be placing a trade basically before it happens. So you're positioned so you can take advantage of their activity. We were talking about additional sources of income. I think I mentioned this last week. I'm going to mention it again. Robert Kiyosaki, Rich Dad, Poor Dad, author, and then he also wrote a book called Retire Young, Retire Rich. In that book, he basically says that earned income, the money you make from your job, is the worst kind of money because it's the highest taxed income that you have. You have to work hard for it, and then it absorbs all your free time. If you get an additional job, there's less free time you have. There's a limited leverage in it because the only way you can earn more money is to work longer or go into your boss's office and beg for a raise. And then there's really very little residual value in income, so you have to basically start over every day. So your job, we have to have a job. People work because the cost of living is not free. They have these things called bills that come. Yeah, yes. This is a shock to you again.
I've been confused all my life.
Yeah, once again. Well, let's hope we can unconfuse you here.
There you go.
So the cost of living is not free. You've got bills that keep coming in. You want to have some fun. You want to enjoy your life. But for most people now, or for many people, and we're looking at close to 60, 70% of the people, they're living paycheck to paycheck, which doesn't leave a lot of money for the fun part of it and leaves even less for putting together for your retirement, for that wealth that you need down the road.
Yeah, you covered a lot of great stuff there, but I want to point out something that I think is the most important thing that you talked about, and it's right towards the end there. You need to have a little bit of fun. And if you think about this, and I talk about this in my workshops and in my investing classes that I say, is people are trained and conditioned to live to work.
Right.
Now think about that for a second. You're trained to live to work. Why not flip that? Why not work to live? Have some fun. As you mentioned, it's not getting any cheaper. We got those pesky bills. Well, everybody has those pesky bills, right? Mm-hmm. But what if you had an income strategy that covered some of that? Or maybe your income strategy that was outside of your job covered your fun. Now, wouldn't that make a difference for you?
Sure.
And it takes doing different things. The market might be an opportunity. And we'll discuss some of these opportunities that the market presents themselves right in these investing and trading classes that we do here at the Academy. We have these classes during the day. We have them on the weekends. So anybody can attend. Yes, it takes about 2 hours of your week. Now, do you think you can manage to take 2 hours of your week to see if that might make sense for you? If you have any financial goals or time goals, it doesn't matter what it is, it might make sense to see what those opportunities are. So I want to invite you to a trading and investing class that we do right here at the Academy or at one of our locations all across the metro. To come into one of these classes, simply just text the word investing. And yes, Al, I know everybody knows how to text. Even you, I believe. Have you learned how to text yet?
I've done it a time or two.
There you go. Text the word investing to the number 210-210, and that'll be for 2 seats for a trading and investing class right here at the Academy or a location near you. You can also go to investingandtradinglive.com, and you can pick your own seat there. So, Al, with all that great content that you just covered on why it's so important to have multiple income strategies, anybody that has money, yes, some do very well, and one income stream covers it all. But the ones that do really well, you find the people that have more than one stream of income have more choices. Now, that being said, there's a couple assets that, in my opinion, have really good benefits based off of time, money, location, all that stuff that we're seeing a lot of people want to understand more about and see what these opportunities are. What are those 2 assets that I'm referring to?
Yeah, and that's great. I'm glad you mentioned that time, money, and location. Those are 3 important considerations. The assets that you're talking about are the foreign exchange market, the Forex market, and the futures market. And the reason that time can be beneficial trading those is that they trade basically around the clock. So you choose when you want to participate. And I think what people find is sometimes based on your style, you may find a time during the day that's best for you. It may be 2 or 3 in the morning. It may be 7 or 8 or 10 o'clock in the morning. Whatever strategy you're using, there's going to be a time that maybe is most beneficial to you. But you can choose that. You instead of just the 6.5 hours the stock market's open, you've got almost 24 hours of time there to choose.
All right. So with futures and Forex being open around the clock,
right?
So you dictate your time,
right?
Now, talk a little bit about the capital requirements, because obviously, to be for full disclosure, trading and investing, you do need money.
Absolutely.
The old saying, it takes money to make money, right?
Yeah, exactly.
But what are some of the opportunities that those assets always also give as far as capital requirements?
Right.
Comparing that to stock.
Well, that's one of the biggest benefits is that they provide leverage, which means you can have a relatively small amount of money that can control something that is a multiple of it. One of the reasons that these are so valuable now is because the cost of equities, the cost of stock is so high that you have a huge amount of money tied up in one position that's fully at risk. And stocks really are more of a long-term asset. But for short-term trading, if you want to really benefit the value or the power of each dollar you have, using leverage is a way to do that. So you could look at an account maybe of around $2,000 that could control something potentially as high as $100,000.
I think that brings a lot more comfort for people because some people think, well, yeah, I don't want to put $10,000 in the market because I'm risking that. Well, you kind of are with the stock market.
Yes,
but let's just say you had $5,000 to $10,000 set aside, and you wanted to be more efficient with that. Treat it like $2,000 because you have the buying power. It'll act like more. So it's very similar to a mortgage.
Exactly.
You take a small amount of money to control a much larger asset. That's the same concept of the financial markets.
Right. Yeah. So you have much less money at risk. Your potential returns are much higher, and you have the ability to do this over a period of 24 hours. So those are some great benefits there. Why don't more people do it? Well, because no one's teaching you how to do it. You're not learning this in school. Your parents probably don't know what those assets are. And to be honest with you, a lot of people years ago just weren't able to participate in those markets. You really had to have a broker to do that. And even at some of the brokerage firms, they were really more mutual fund stock related strategies that they would put you in. But now with the way technology has changed, with the education that's available and the trading platform sophistication, we all as retail traders have some real advantages, in fact, advantages over some of the big players.
Yep. And one of those reasons is because we do have smaller amounts of money, so we can get in and out of our positions at a snap of a finger.
Saying we have smaller amounts of money might sound like a disadvantage, but it actually is an advantage to us because we get in right away, we get out right away.
Yep.
The institutions can't do that.
Yeah, you physically need buyers for sellers. So our small, $50,000 accounts, $100,000 accounts, $1 million accounts, even $10 million accounts, we can't move the market with that. But it's much easier to get in and out. It's kind of like sneaking in and sneaking out without anybody seeing us because they don't care about us. They don't care about, small timers that have tens of thousands or hundreds of thousands or even a couple million. It doesn't matter what the small timer has. So these opportunities have been around for a while,
Right.
and they're not taught in schools. And I think a lot of our, I've been getting a lot of feedback from people, and people are like, you know what? I'm sick of being stuck doing the same thing over and over like everybody else and being in the same position as everybody else. And they're starting to take matter in their own hands, and they want to be able to do more for themselves. So that's why we have these trading and investing classes, to introduce you to these topics, these techniques, these concepts, as far as how to trade like those institutions, so you have hopefully more benefit for whatever that benefit is that you're looking for, and having a strategy designed for that. Simply to come into one of these trading and investing classes, just text the word investing, and that's going to be to the number 210. Do that right now, and that'll be for 2 seats. When you do that, you're going to get a text right back with a link to our landing page. All you got to do is click that link, and then you can actually pick your own date and time there. Text investing to the number 210 for 2 seats, or go to investingandtradinglive.com, and then you can pick your own seat there. Al, we got a lot more to discuss here. We have more retirement strategies coming up. And I know we want to talk a lot more about income as well, because people are listening. They want more. They're asking for it. So we'll talk about that coming up next. This is Josh and Al, Investing and Trading Live. We will be right back.